Hey, it's Steve Williams, founder and president of creditrepairshop.com, and in today's video, we're going to talk about 1099-C debt cancellation or cancellation of debt, what it is, what you can do, and to not be afraid of it, because I get a lot of people that say, man, I got this debt cancellation. What do I do? How does it affect my tax refund? All these questions. I'm going to answer them for you here and tell you what you can do. And let's jump right into the video first. Here is the definition. Form 1099-C, according to the IRS, nearly any debt you owe that is canceled, forgiven, or discharged becomes taxable income to you. You'll receive a 1099-C cancellation of debt from the lender that forgave the lender that forgave the debt. Sorry about that. So now let's move over here to the IRS, because we're going to get our information directly from them. We're not going to go to some other websites. So here we go here. This is the real deal. You can read it here straight from the IRS. Look right here, straight from the IRS. Let's move down. So basically, I mean, we don't have to make this hard for you. If you settled a debt with an original creditor, or even with a debt collector where they are saying that they're forgiving the debt, or that you did a debt settlement and they're going to try to write off the remaining amount, you can get that letter, that 1099-C forgiveness of debt forgiveness, cancellation of debt. And basically what that's saying is that they're going to consider that as income to you. They're going to say that that money that they wrote off, that you didn't have to pay because you received that money either in services, or you received it in cash or in credit if you used a credit card or payday loan, or some type of way that you received the service or the money. They're going to say that that was considered income to you because you had use of that financial instrument, so to speak. So when they file it, what they're doing is they're wanting to get either a 100% write-off or the remaining write-off of what they did not collect from you. Now, what's going to happen is that when the IRS gets that, they're going to stack that on top of what you have as your gross income. And then you could end up, depending on your situation, you could end up where you either have a higher tax burden, or, if you own a business or you have write-offs, it may not affect you. But with most people, what it's done is it's taken them into another income bracket, and it has affected their income tax refund that they were expecting to get. So it was something that was like a shock to them. And then also some people said that they received the 1099-C and what to do with it. Well, I'm going to tell you, if you receive it before you file your taxes, you better include it in there, because the IRS is waiting to see if you will include it. And even if you don't include it, you're probably going to get caught on the other side, because the debt collector or the original creditor filed that with their taxes. So if it catches up with you right away, or it's going to catch up with you later, regardless, they're going to catch up. It's going to catch up with you, because they're filing these documents, and the IRS is paying attention to these 1099-Cs. They're paying attention to all the 1099 income that is being reported, because we're becoming a gig economy. One of the things that I had noticed is that this year, that was different than all the other years that I filed my taxes for my company, is that I'm receiving these 1099s from all of the businesses that I do business with. And the IRS is expecting me to report that. So it's not where you're just lumping it into your all of the money that you made and you're just reporting it. Now it's like an extra process where the IRS is comparing what you report and what other people report that they gave you. So now let's talk about some of the exemptions to the cancellation of debt. It says right here, amounts canceled as gifts, bequests, where someone, gave it to you, devices or inheritance, you inherited the money, certain qualified student loan cancellations, they won't penalize you for it. The other ones here is other educational repayment or loan forgiveness programs. And you're going to have to consult with your tax professional on this here. And programs that provide health services in certain areas. So if you got an educational loan that was forgiven or the repayment plan was reduced and you're in the health services field, some of those will not go against you as income for the debt cancellation. Amounts of the canceled debt that would be deducted if you as a cash basis taxpayer paid it. And a qualified purchase price reduction given by the seller. Like the seller can't try to say, well, hey, I'm writing this off because I gave them a discount. That's not gonna work. Any pay per performance success payments that reduce the principal balance of your home mortgage under the Home Affordable Modification Program, and then amounts from student loan discharge on the amount of death or total of a permanent disability. So if you were disabled or something happened and they can't put that on you that way. And any amounts that meet the requirements of any of the following exclusions aren't included in income, even though they are cancellation of debt. Now, here are some other exclusions from gross income is debt canceled in a Title 11 bankruptcy case, debt canceled from the extent insolvent. So if you went insolvent, this is the one that probably a lot of you would qualify for, because if you just had money problems, but you're going to have to consult with a tax person. I'm not the person that you would talk to about this. I'm just telling you that this is available. Cancellation of qualified real property business indebtedness, cancellation of qualified principal resident indebtedness that is discharged subject to an arrangement that is entered into an evidence in writing before January 1st, 2021. So these are the exclusions that you can have. And now I want to click here, show you the form real quick. What you could do is you could fill out this form here and you could see where you would fall, or you could sit with a tax professional and they'll let you know what's going to be the effect of the 1099 that is filed, that debt forgiveness that was filed, I won't say filed against you, that was filed in your name for canceled debt. But just so you know, to review real quick, is that a 1099-C debt cancellation, and we'll go back here, because a lot of people, when they get it, they are very afraid. They're like, what is this? And it's just saying that an original creditor, or it could potentially be a debt collector that you did a settlement with, they're filing that. Or it could be a debt collector that's just giving up on the money and they want to get a 100% write-off on the debt, that they want the IRS to they're notifying the IRS that they canceled the debt, they've forgiven the debt, and that they want the IRS to consider that as income given to you. That's what they want to do. Also, when they cancel that debt, they cannot sell it to another debt collector and come after you for it once they do that. And that goes for an original creditor and it goes for a debt collector. So don't panic if you get it. There's options. You need to review what you owe with your taxes. If you are used to doing your own taxes, you could just figure that in there to see where you're going to be at. If you're not used to doing your own taxes, just take it to your tax professional and have them work out several scenarios to see what would be the best option for you to file your taxes, understanding that you have that 1099-C debt cancellation filed with the IRS for a debt that was forgiven that you owed. So if you need help, please contact us at thecreditrepairshop.com. If you don't have your credit reports and scores, remember everything starts there. You can actually look at your credit reports and see if that matches the 1099-C. Before I forget, something that you should always do is to watch out for inflated 1099-Cs that are being filed. And the way that you could do that is you could look at your credit reports and you could see what was the original amount, and they might try to balloon that up so they could get a bigger write-off. That is not legal for them to do that, but you got to have information to dispute that. And the number one way to do it is to get copies of your credit reports and look at the amount, the original amount of the debt that's filed on your credit reports, and you can use that to counter what they're trying to file as a 1099-C against you. So get your credit reports. You can click the link below, go to www.scores.com. I'd really appreciate it. Grab your credit reports and scores from there. Please like my videos. This helps us be able to help more people. So you're actually doing your part by liking the videos. Also, click to be notified of new videos that I post, and also post your comments, and also share this page with your friends, family, people that you know. Recommend it. I really appreciate it, and I respond to all of the comments. And then subscribe to this channel if you're not already subscribed to the Credit Repair Shop channel. Thank you, and you have a great day.